interest, we have variable rate interest and we have fixed rate interest. And the majority of all loans in the Netherlands have fixed rates. Only 1% of the loans originated have variable rates. And fixed rates we have from 1 to 30 years. And currently, long fixed rates are very popular. 20, 25 or even 30-year fixed rates are now originated in the mortgage book. And here you have an example of how an interest rate table looks, and this is from NABC Direct. And you see we have different fixed rates. It's in Dutch, but it says 1 year, 5 year, 10 year, 15 year, etc. And we have what we call LTV classes. And those LTV classes are based on market value. The Dutch word is risicoklasse. We have a special class for NHG, and NHG is explained in the module Who is Who in the Zoo. And then we have for different LTVs, different interest rates. It's an annuity loan. That's a type of product. And it's an NABC direct mortgage. So that's the type of product. And we call this one product. And you see that one product can have, let's say, a lot of interest rates depending on the fixed period, the LTV class, and the repayment type. And if we have a closer look at the interest rates, we see, okay, where does the interest, how is the interest rate calculated? And it includes the following elements. Of course, the cost of funding. It includes risk cost, especially credit risk and interest risk. Of course, it includes operational and ICT cost, marketing, and last but not least, it includes equity cost. Interest rates and characteristics of interest in mortgage products are very important. First of all, there's the question, if you have an offer, what will be the mortgage rate when the mortgage is really originated? And you have to bear in mind that between receiving an interest letter, that's an offer for an interest rate, and passing the deed of the mortgage at the notary, that can be 2 to 3 months, but it also can be 6 to 12 months, especially for newly built houses. So that's quite a long time. And when you receive your offer, you don't know what the market rate is at the moment that you will pass the deed and really receive the money. And there are 2 ways we have in the Dutch market. First of all, we have interest rates offered, which is in the offer letter, the interest letter, but there is a different system where the market rate during passing the deed is the interest rate you receive on your mortgage. So you have to bear in mind that there are 2 systems in the Dutch market. Another thing which is important and related to interest is what we call redemption fee for refinancing, and it's a penalty. If you have a 20-year fixed mortgage rate and you decide to refinance after 10 years, you have to pay a penalty. It's not valid when you sell the house, only in refinancing, and there is a penalty-free percentage of the loan. That can be 10 to 20% of the original amount of the loan. And what I said, there's only a penalty when the consumer is refinancing, and we call it in Dutch vergoeding voor vervroegde terugbetaling. There are other features in the mortgage. For instance, how long is your offer valid? And normally it's around 3 months, but you can extend it, but it's not for free. There are costs associated to it, and the cost we call bereidstellingsprovisie. Normally, you can take the mortgage with you when you are moving houses. So, when a consumer has a 20-year fixed mortgage, and after 8 years he decides to move, there's another 12 years of mortgage left. If the interest rate is lower in the market than the interest rate in the mortgage, the consumer will probably go for a new mortgage. But if the market rates are higher, he can decide to take his mortgage conditions to the new house. Another important issue is what we call automated switch to lower LTV buckets. In the example of the interest rates of NIBC Direct, you saw that there are different LTV classes. When there is redemption on the loan amount decreases over time. So that implies that the percentage, that the LTV will decrease as well. Not all the lenders, but some lenders have a mechanism that you get a reduction of the interest rate according to the LTV buckets automatically when the amount of the loan will decrease. And sometimes there is a discount, especially with general banks, when you decide to have other products. And then we have a number of what I would call strange products in our mortgage market. First of all, we have a bridge loan, and that's called an overbruggingshypotheek. And the bridge loan is in the situation when a consumer buys a new house, still possesses his old house, and will sell his old house after a certain time. So the bridge loan is to bridge the period when the consumer has not one but two houses. We have also what we call a bank guarantee. And the bank guarantee, that's important for the process of between buying the house at the real estate agency and the moment that the deed is passed at the notary. And we learned that can be 2 to 3 months easily. During that period, the seller of the house wants to have a guarantee that the buyer really wants to buy the house, and therefore you need to pay 10% of the price. And if you don't have the money, then the lender will give the seller of the house a bank guarantee of 10% of the price. We have in the Netherlands also a growing buy-to-let buy-to-let market, and therefore we have buy-to-let mortgages. And a buy-to-let mortgage is for a landlord who wants to buy a house, and he doesn't want to live in the house himself, but he buys it for renting it out. A special category of loans are energy-saving loans. We call it verduurzamingsleningen. Small loans with very, very interesting conditions for the consumer, and it's to finance equipment like solar panels and heat pumps and isolations. It's becoming more and more popular in the Dutch market. So that was a small overview of our products. We have different modules. You can find them in the learning management system, and I hope to see you soon at one of the sessions.